past 6 months, I would say lots of things has changed. For instance, now everybody is talking about the tariff disruption and guessing what will happen next. So what do you think past few months, especially on the real estate market?
Yeah, there's a lot of uncertainty in the market, and a lot of it's being
Sure.
caused by the discussion about tariffs.
Yeah.
Nobody's really sure how big the tariffs are going to be, how many are going to be implemented, what they're going to be implemented on. The market is reacting to it. We've seen the stock market values come down.
Yeah, up and down.
We know that the economy in the first quarter actually went negative for the first time in a few years.
Yes, I saw the news.
But that was mostly because of a massive increase in the number of imports. So we had a lot of people in the United States that were buying goods and materials, trying to get them here before the tariffs took effect.
Yes, yes.
And when you have that kind of huge imbalance in trade, it does tend to show as a negative in the economy. So the rest of the economy seems to actually be doing pretty well. When it comes to real estate, the commercial market generally seems to be finally stabilizing a bit after a rough couple of years. But I know most of your members are really interested in the residential market. And what we're seeing there is pretty much what we'd anticipated. We are seeing prices slow down. We're actually seeing some markets where prices are declining year over year a little bit, and other parts of the country where prices are going up. So if you look at the northeastern states, if you look at parts of the Midwest, still not a lot of inventory available to buy, and those prices continue to go up 4, 5, 6% year over year. If you look at the Gulf Coast, states like Florida, Louisiana, Texas, too much inventory, and we're seeing prices actually come down a little bit year over year. So it really depends on your local market in terms of what those trends are. But I'm still forecasting that we will end this year with a higher number of home sales than we saw a year ago. It's not going to be a strong booming housing market, but we are probably going to see a slight improvement both in the number of homes sold and a slight increase in home prices for existing home sales.
Yeah, I will follow up on this topic. For now, what are the changes you think are the major factors that is impacting the current and future markets?
Well, economically, it's hard to guess because we're not sure what's actually going to happen with tariffs. If the tariffs are executed the way they've been talked about, they would be the highest rate of tariffs we've executed since the 1920s, so 100 years ago. Typically, economists tell you that when you have a high tariff environment, you have inflation because the cost of products goes up. And you typically have a little bit of unemployment, and we're already seeing a little bit of that happening. UPS announced recently they're laying off 20,000 people because they're not seeing as much import transportation activity as they normally would. We also know that the Trump administration has said they'd like to reduce the government employee headcount by about 10%.
Yeah.
So that'd be about 300,000 people losing their jobs. So we're likely to see those trends tick up a little bit. All of that said, the underlying economy is still actually pretty strong. Unemployment, even if it goes up another point, would still only be at about 5%, which is still a very strong economy. So the impact of what we're seeing on other parts of the economy probably won't have a major impact on the housing market. Flip side of all this is if the economy does slow down, if we see inflation start to tick back up a little bit, it's likely the Federal Reserve will cut rates, and we might see mortgage rates and financing costs come down because in a normal cycle, what happens is if you have a really strong economy, wage growth really strong, prices going up, your mortgage rates go up. If you have a weaker economy with higher unemployment, slower wage growth, you see mortgage rates come down. So affordability is a real problem for people looking to buy homes right now.
Yeah.
I do see home price appreciation slowing down dramatically this year. If we also see mortgage rates come down a bit, That improves affordability. And
Yeah.
for people that still have their jobs, and that's most people, that improves conditions. And I think we have a lot of pent up demand. So for your investor audience that's looking to buy properties, fix and flip them, I think there will be more opportunities to sell properties this year. And for your investors who are buying rental properties, there's a lot of demographically driven demand for those properties as well.
Mm,
So I
mm.
do think 2025 is going to be a year with a lot of opportunities for real estate investors.
Okay, great, great. If we put ourselves in the economic cycle or real
Mhm.
estate cycle, I know that it probably also depends on different property type.
Right.
But where do you see we are right now located? Because I heard different voices. Some people say, we are at the cliff to fall down, but some people say we are kind of in the bottom to climb up. It's totally opposite views. What is your view of where we are regarding the cycle position?
Yeah, that's a great question. The reality is that we are in uncharted territory right now, because we've only had a global pandemic like COVID once or twice in recorded history. So there were some extraordinary measures taken when COVID hit that have had huge repercussions on the economy and on the housing market. Historically, though, mortgage rate, because of actions the Federal Reserve took, that probably pulled a lot of buying activity forward from people that would have bought a house in 2 or 3 years, but jumped into the market because they wanted to take advantage of, 2.5% mortgage rate. You can't blame them. That's had a ripple effect on what we've seen in the last couple of years in terms of home sales. Then the other impact that COVID had because of the Federal Reserve and some government policies is we saw inflation go crazy. So highest inflation we've seen in 40 years. And in order to combat that, the Federal Reserve started raising the Fed funds rate very rapidly, very quickly. That drove mortgage rates up. So all of a sudden, you had a situation where home prices had gone up 40%. So affordability is the worst it's been in about 40 years. When you look at home sales, they peaked in 2021. We sold 6.1 million existing homes in 2021. And we were off to a really strong start in 2022 before those mortgage rates went up. But we wound up selling about 5 million properties in 2022. That dropped down to a little over 4 million in 2023
Mm.
and dropped down even a little bit lower than that, closer to 4 million in 2024. I do believe 2024 probably represents the market bottom in terms of existing home sales. January this year, we saw home sales up year over year.
Mm.
February and March were down a little bit, but only marginally. And some of the preliminary numbers we're seeing from April suggest that we are seeing more buyers come to market. So I don't see home sales dropping below where they were a year ago. I think that was the market bottom. We're also seeing new home sales stronger
Yes.
than in prior years. So I think that's another sign. We have a lot of pent-up demand. A lot of people would like to buy a house if they can find something they can afford. Affordability should improve at least a little bit this year. Very likely we won't see home prices go up nationally more than 2.5% this year at the most. And if it really is that level, with inflation being at about 2.5%, that means that home prices in real terms aren't going up at all. They're flat. And it is likely that mortgage rates will continue to go down. They're actually a little lower now than they were a year ago. So all of these factors, lower home prices, relatively speaking, lower mortgage rates, and a lot more inventory available to buy. There's about 30% more homes available to buy today than there were a year ago. So all of that coupled with this pent-up demand, I think puts us in a position where we will start to see home sales improve this year rather than another crash. There are people that are predicting a 20-30% price drop in homes. I don't see that happening. In order for that to happen, people would have to sell their homes. They would need to sell their homes to be willing to accept a 20 or 30% price cut. We had that situation back in 2008. We don't have it today.